This is going to be the best 60 minutes of your life. This year is coming to an end, and if I can just go through the blessings of this year, I traveled to more than 20 countries in 1 year. I visited more than 3 different continents in 1 year. Got more than 3 luxury cars in the same year. A lot of properties, a lot of assets, a lot of blessings. And coming to the next year, 2024 and above, I have one goal: to be able to make 10,000 people profitable in Forex trading. Simple. I want my goals to be realistic. My goal is simple: to be able to make 10,000 people profitable in 2024 and above. And I want you to be part of that journey. I want you to be part of that goal. That's why on this particular video, I want to make you a Forex millionaire in 60 minutes. This is going to be the best 60 minutes of your life. I promise. I'm going to be taking you step by step. That's why you see here we have practical steps. Those are steps that have worked for me for the past 8 years, because I've been trading Forex for 8 years, and I'm going to see how I can be able to combine everything I've learned for 8 years, which is working for me, and give you in 60 minutes. By the end of this 60 minutes, trust me, you are going to be a Forex millionaire. It's guaranteed. I don't care if this is your first time hearing of Forex trading. This video is going to be for you. I don't care if you've been trying to figure out how to make money in Forex trading for years. This video is going to be for you. I don't care if you're a beginner or even an advanced trader. This video is still going to be for you, because I'm going to be showing you guys exactly what is going to be working in 2024 and above. So if you are ready for us to get into this video, as always, make sure you take your book to take your notes. Make sure you get your popcorn ready. Make sure you watch to the end of the video. And if you are new here, as always, smash that subscribe button below to subscribe to the channel. Leave a like on the video, and let's get started. Good. So let's just go on the table. So we're just going to be rolling on our roadmap, because we have our roadmap. We have a target: 1 hour, 60 minutes. I have 60 minutes to transform you to a Forex millionaire. So I need to be able to have a roadmap that has to guide me. So let's see how we're going to be able to achieve that, right? Perfect. This is our roadmap for today. Let me just put this here so that I can easily get to it. This is our roadmap. So what we're going to be doing today is simple. We're going to be talking about what is Forex. So that's the first thing. What is Forex or Forex trading? We'll talk about that. So let's just increase the thickness of our pen. What is Forex or Forex trading? We'll talk about what is traded in the Forex market. I know many of you, 90% of you guys watching this video, this is the first time of you hearing of Forex trading. So we're going to talk about that. What is Forex trading? What is Forex? All right. What is traded in the Forex market / currency pairs? We're going to talk about that. Then we're also going to be able to talk about a live example of a Forex transaction. Everything you do in life. That's why Forex trading will never stop. Everything we do in life, or everything we do in our economy, is backed up by Forex. And I'm going to be showing you guys live examples, all right? After talking about a live example, just to make you feel, just to make Forex trading realistic, you should be able to, it should be something tangible. You should feel like Forex trading is not rocket science. You should feel like Forex trading is something you can touch. That's why we're coming out with that live example. After, we're going to go to what is a demo, live, or a prop firm account. All right, very important. You guys get confused. What's a demo account, a live account, a prop firm account? We're going to get to the prop firm ecosystem so that you guys can understand that. Then remember, things are getting a little bit hot. We need now a strategy to be able to make that 10 million in 2024. We need a strategy to be able to, you need a strategy to be part of those 10,000 people I want to make profitable in 2024. So that's why we'll talk about what is a Forex strategy, examples of Forex strategies, and I'll be able to give you a very simple practical strategy that you can start using now as we speak. And then after, the transition is very important. How can you be able to transition from being a demo trader to a live trader to a prop firm trader to someone who is traveling to 20 countries in 1 year, to someone who has gone to more than 60 countries, to someone who can buy 3 luxury cars in 1 year, to someone? how can you transit from zero, from grass to grace, from zero to hero, from nothing to something? How can you be that person? That is where we're going to be talking about that transition. Under that transition, we're also going to be talking about trading psychology. And who I am today, not because of what I know in terms of strategy, but because of how I have been reprogrammed my mind to think and act as a Forex trader. So we're going to be able to talk about trading psychology. So let's go to the first step on our list, which is, what is Forex trading? So you can either call it the FX market or the foreign exchange market. So what is the FX market, the foreign exchange market, or the Forex market? So the Forex market is just a global market where currencies are being traded. It's just a global market where currencies are bought and sold. Don't worry, this is not rocket science. By the end of the video, I'm going to demystify everything for you guys to understand exactly what I'm saying and how to use it to make money. So that's why so the word Forex, so you guys hear of Forex, all right? So where does the word Forex comes from, all right? So remember I said you can call it the FX market or the foreign exchange market. So the word Forex is derived from, they came here and they took FE, all right? So they took FE from foreign, and here on exchange they took EX, all right? So they took FE arrow from foreign, and on exchange they took EX. So Forex. Does it make sense? Forex, the Forex market, the foreign exchange market or the FX market. So that is where the Forex came from. And just as most of you guys, you used to hear people, they say George Soros trades a stock, this one is a stock trader. It's the same thing. It's the same thing, all right? In the stock market, people who participate in the stock market buy and sell stocks of different companies. While in the FX market, we buy and sell currencies of different economies. All right, we buy and trade. We trade currencies of different economies, and strategies and fundamental or economic indicators will help us to be able to predict the direction of that particular currency, or to predict the future standing of that economy. That will help us to be able to make money. So that's just the difference between the stock market and the Forex market. The Forex market, the reason why we trade Forex, the reason why people prefer Forex trading to stock trading is liquidity. The Forex market is very, very liquid. It's the biggest market in the whole world, which I'm going to be showing you guys the comparison on the other slide. So let's come here and see why people prefer to trade Forex over different assets. Let's just take something like, let's say the Tokyo market. The Tokyo market can be about 240, these are just examples, maybe about $240 million transaction per day. These are daily transactions, all right? We can go to the New York Stock Exchange. The New York Stock Exchange can be maybe about 380 million or 400 million per day, transactions per day. We can go to maybe the Asian session can be maybe about 300 million. But bro, look at Power Forex. Look at Uncle Forex. Look at Forex is having a $6.6 trillion transaction per day. That is trillion with a T. Trillion with a T. All the competitors are having in terms of millions. But Forex alone has a daily transaction volume of about $6.6 trillion. So people like us that we are actively trading in the market, or market participants, we are divided into groups. We have banks who are actively trading in the Forex market. We have hedge funds that are actively trading in the Forex market, and people like us are called retail Forex traders. Retail Forex trading just comprises about 10%, just about 10% of what is traded in the Forex market. Meaning, bro, even if you have to make 10 million every day, $10 million every day, they're going to pay you. The money is there, bro. The money is there for everyone. That's why I don't care sharing this information. That's why I don't care giving you guys what I've learned in 8 years for free in 60 minutes. Because the money is there for everyone. The money in the Forex market is for everyone, because this market is having a $6.6 trillion transaction per day. Let's go to the other slide now. That's why let's go to now what is Forex trading. Remember, we talk of what is Forex. That is Forex. Everything I've been explaining is what is Forex. I've shown you guys how the word Forex is derived. Let's go to now, what is Forex trading? So Forex is, I've already explained what is Forex. Then Forex trading now is the act of trading. All right. So do you actively trading in Forex? You are doing what we call your Forex trading. You are trading in Forex, meaning you are buying and selling Forex currency pairs. That's why you see here, Forex trading is an act. That's the most important thing. So the act of you buying one currency and selling the other currency, or trading this currency pair for this one, guided by what we call exchange rate, is called Forex trading. So now you know what is Forex and you know what is Forex trading. Let's go now to the other slide where we'll talk about what is traded in the Forex market / currency pairs. Because now we've already spoken about what is Forex, we've already spoken about what is Forex trading, but now there's still something at the back of my mind telling me that there's still a particular level of abstractness. It still looks a little bit abstract to you, and that's why on this video I want to be able to tell you why you should trade Forex, what is traded in the Forex market, and how it is traded. So what is traded in the Forex market is called currencies. All right, different economies have their currencies, and a currency to an economy is the fuel to that particular economy. Every particular economy, the United States, Great Britain, South Africa, Lesotho, Mozambique, Zimbabwe, every economy has its own currency. And that currency is the fuel to that particular economy. I'll be able to know the strength or the weakness, the power of an economy based on what? Based on the power of its currency. So just knowing the currency of a particular nation, I'll be able to know everything about that nation. I'll be able to know if that nation is a weak economy. I'll be able to know if that nation is a strong economy or a medium economy, a developed or a less developed economy, from the strength of that particular, from the strength of the currency of that particular economy. And when we trade in Forex trading, what will enable us to be able to exchange one currency to another is what is called the currency exchange rate. So the exchange rate will help you to be able to exchange the dollar and the pound, the dollar and the South African pound, or the South African rand, maybe the Canadian dollar and the United States dollar. What will help you to be able to exchange between two currencies is what is called the exchange rate of that particular currency. And then let's just see, for an example, right, some economies and their currencies. Because remember I said the currency to any nation is the fuel to that particular nation. That's why if you can see here, we have USA. Their currency is called the United States dollar, and this is a symbol. So each economy has a symbol, or each economy has its own currency, and the currency is represented by a 3-letter symbol. All right. So each economy, please take down your note, because this is going to help you. If you think you're going to neglect this, when you go ahead, you will need these basics. So each economy has its currency, and each currency is denoted by a 3-letter code. So the 3-letter code, the first two letters on the code represents the economy. All right, represents the economy, and the last letter on the code represents the currency. All right, so the first 2 letters represents the economy, and the last letter represents the currency of that particular economy. For example, the United States dollar, you can see USD. So you won't see, they don't write, when you see on your platform and you're trading that particular currency, you won't see United States, no, you just see USD. But seeing that code, you'll be able to understand the 2 letters stands for the economy and the last letter stands for the currencies. Like that in all the currencies in the world, no matter the currency you're talking about. Let's go now to UK. We have UK, Great Britain, pound. So the currency of UK is called Great Britain pound. That's why I see the 2 letters stands for Great Britain and P stands for pound. So the currency is represented as what? GBP, Great Britain pound. Let's go to Canada. Canada, the economy of Canada, their currency is called Canadian dollar. That's why CA stands for Canada and D stands for their currency, which is the dollar. So you have the United States dollar, you have the Canadian dollar, you have the Zimbabwean dollar, and different economies use the dollar. But remember, the strength of this dollar is different. You can't compare the United States dollar with the Zimbabwean dollar. 1 United States dollar, I mean just 1 United States dollar can be about $6 trillion in Zimbabwe. That's the craziest things, the craziest thing I've ever seen in Forex, seriously. 1 United States dollar can be about 2 billion. 2 billion. I think in Zimbabwe, the Zimbabwean dollar, we even have 100 zillion. I mean, one paper, you see one paper, Zimbabwean dollar, you see 100 zillion, 200 billion on one paper. So the economy is very, very deflated. Their currency is in a very bad situation. But that is what it is. That is what you'll be able to see when you start trading Forex. You'll be able to see most of these currencies and how they work. Then Japan, we have the Japanese yen. This is the economy and the currency. And then we have South Africa. So South Africa, we have South African rand. So for example, in South Africa, if we're talking about South African rand, you can see this is a currency. All right, I'm someone who travels a lot, and anytime I want to travel, the first thing I start checking is what is the currency of where I'm going, what is the exchange rate to my South African rand, how much am I going to get, how much am I going to lose if I change my mind to travel and afford it. So I check a lot. So this, what I'm holding in my hand, is a currency. This is a currency you guys can see, and this currency is called the South African rand. We have the 200 rand, the 50 rand, and the 100 rand. And this particular currency is also represented by a 3-letter code. The first 2 letters, ZA, represents the country, which is South Africa, and the last letter represents the currency, which is the rand. So you combine the 2, you combine the 3 to form the code, which is now the South African rand. So that is that about currency, or what we trade in Forex trading. So what we trade in Forex trading, we trade currencies, and we trade them in pairs. We trade them in pairs. Remember, anytime you buy one currency on a currency pair, you automatically sell the other one. I'm going to be showing you that one on the other slide. All right, so we have different currency pairs, and if I'm trading something like Great Britain pound USD, anytime I buy Great Britain pound, I automatically sell USD. Anytime I sell Great Britain pound, I automatically buy USD. So they are traded in pairs. Currencies are always traded in pairs. There is no, that's why it's a Forex market. The buying and selling of different foreign exchange or different currencies of different economies. So let's quickly go to major and minor currency pairs. Remember, I've already spoken about currencies, and now let's just quickly go to major and minor currency pairs. So let's start with major currency pairs. So what are major currency pairs? So major currency pairs are called, or major, let's start with major currencies, and then we go to major currency pairs so that it doesn't confuse you. Major currencies and major currency pairs. All right, let's start with major currencies. Major currencies are currencies that have the highest liquidity. As currencies are just, they classify according to major, minor, and exotic, and the criteria of classification is just liquidity. All right, just liquidity. All right, so major currencies are currencies that have the highest liquidity. Minor currencies have the least liquidity, just as the name goes, and exotic currencies have like little to no liquidity. The liquidity is very, very low. All right, so after knowing what is major, minor, and exotic currencies, let's talk about major, minor, and exotic currency pairs. All right, currency pairs. So with major, minor, and exotic currency pair, a major currency pair is a combination of 2 major currencies. As easy as that. The combination of 2 major currencies will give you a major currency pair. For example, the United States dollar is a major currency pair. The Japanese yen is a major currency pair. So combining these two, because in Forex trading, you trade in terms of versus, all right? Like when you play football versus this. So you can also write USD versus Japanese yen, or in short, you just see, in your platform, you just see USD Japanese yen. So now you have a 6-letter code, and you can easily just read. You know you are trading the United States dollar and the Japanese yen, all right? But in your mind, you just know it's USD versus the Japanese yen. If you are buying this one, if you are selling this one, then you are automatically buying this one. And if you are buying this one, you are automatically selling this one. Does it make sense? So that is that when it comes to currencies. And another major currency pair will have Great Britain pound and the United States dollar. Great Britain pound is a major currency and the United States dollar is a major currency. The euro and the dollar. The euro is a major currency. USD is also a major currency. USD and CAD. United States dollar is a major currency and the Canadian dollar is also a major currency. Now let's go to what is a minor currency pair. So a minor currency pair is just a combination between a major currency and a minor currency. So a major currency and a minor currency will form a minor currency pair. All right, that's instead the irony at that particular point in time. That's why we have Great Britain pound, CHF. This is the Swiss francs. I remember when we were in Zurich. We were in Zurich, Switzerland, and that was the most expensive city we've ever visited. That was the most expensive country we've ever visited. We spent all our money. Everyone you see in Switzerland seemed to be, or in Zurich particularly, seemed to be a millionaire. That was Zurich and Monaco. Zurich and Monaco, if you are from Europe, you understand. There, you can't see 10 people without seeing a millionaire. You can't see 10 cars without seeing a fast car. So their currency is known as the Swiss francs. We then move from minor currency pairs to exotic currency pairs. So just from the name exotic currency pair, an exotic currency pair is just a combination of two exotic currencies. As easy as that, all right? Just a combination of two exotic currency pairs. For example, we have the Turkish dinar or something and the franc CFA. Franc CFA is actually the money that is used in Cameroon and other Central African economies. So that is considered as an exotic currency. All right, the Turkish dinar, whatsoever it's called, is also considered as an exotic currency, or the naira and the franc CFA. The naira is considered as an exotic currency. The franc CFA is considered as an exotic currency. And most exotic currencies are the weakest currencies in the whole world. Most exotic currencies, they can't compare. There's no way you can compare the naira and the dollar. The naira is weaker than the dollar. The franc CFA is weaker than the dollar. All right, the Mexican peso or something is weaker than the dollar. All right, so exotic currencies are weaker than major currencies. And when it comes to Forex, the best advice I will give you is only trade major and minor currency pairs. Never trade exotic currency pairs, all right? So when it comes to Forex, you only trade major and minor currency pairs and never try to touch exotic currency pairs for the first reason. The first reason being that major and minor currency pairs are the most liquid. So when a currency pair is liquid, anytime you make your prediction, if the market goes your way, you're going to easily hit your target. You're going to be able to make a lot of money. Another thing is also for the cost of trading. Cost of trading, when you are trading major and minor currency or currency pairs, the cost of trading is minimal. You'll be able to pay less for spreads. But if you make a mistake and you open a trade on exotic currency pairs, just by opening that trade, your account can blow because you pay very high in terms of spread. So you always have to factor in the cost of trading. So in line with that, you never trade exotic currency pairs. You only trade major and minor currency pairs. And then let's quickly go to what a live example of a Forex live example, or a live example of a Forex transaction. All right, this one is very simple. You're going to enjoy it. You see this guy here. I don't know if this is how I look, but it says Mr. Goloff, right? Remember, by the end of this transaction, this is when you're going to feel like Forex is something which is tangible. Forex is something you can touch. All right, good. So let's make Forex visible. Let's make Forex something you can touch, something which is no more abstract again, so that you can be able to know how the entire Forex market works. So this is Mr. Goloff right here, and Mr. Goloff wants to go. I travel a lot. I think I should be the most traveled African now, or the most traveled Forex trader in the world. I travel a lot, and let's just say I want to go from I want to take my family to the United States for a vacation, right? And then just anytime I want to travel, that's the first thing, together with my wife, that's the first thing we calculate. We check in terms of the currencies, how much. So we budget the whole trip before we even kick off, so that we shouldn't be surprised on the way, right? So let's just say we are going to the United States and we have 100. We see that, okay, in the United States, we can the whole trip we'll spend about $10,000. Because even when we were traveling the whole of Europe, we went to almost about 20 countries in Europe, and each country we go, there was no country we were spending less than $10,000. There was no country we spent less than $10,000, because I was traveling together with my wife and my son. My son was just about 8 years, or was just about 8 months old back then. So you can know the logistic. Everyone said we were crazy, but yes, in life, if you're not crazy sometimes, if you're normal, then you will just be another normal poor person. All right, you must be able to do some crazy things sometimes. And as parents, we took that to ourselves and we're like, yeah, we're crazy. We're going to be able to take care of our child. We went on that trip and everything was perfect. We went even to Finland, the coldest place. We went to the Arctic Circle, the North Pole, all of that with our 8 months old baby, and everything was fine. And every country we visited, we used to spend at least $10,000. That's why I'm just using this $10,000. But in this place, let's just assume we are going on vacation to the United States, right? And here we know that, okay, we're going to be spending about $100. We know that, okay, we're going to be spending about $180,000. That's what we know. And remember, if I'm traveling to the United States, there's no way I'm going to carry South African rand to US. In the United States, they don't use South African rand. What is their currency again? Remember, I said every economy has their own currency, which is the fuel of that economy. And the goods, their transaction, the trade, the goods and services are being exchanged using all of their currency. That's why we need to be able to exchange our South African rand to the dollar before we can enter in the United States. So at the airport, when you move to the airport, you'll be able to see where they say Forex Bureau. Or anytime you move to a bank, have you ever wondered why you move to a bank and you see where they say Forex? You see Great Britain pound is this one is this. Those figures are going up and down. That is Forex. This is Forex already getting real now. That's Forex. So the next time you move into a bank and you see Great Britain pound to this, you should already understand those are the exchange rate. And if you have to exchange your naira to the dollar, or your naira to the pound, you're going to be using that exchange rate you are seeing against that particular currency. So anytime I move to the airport, every airport on earth, every airport has the Forex Bureau. The first time I move to the airport, anytime I go to any airport, the first thing I check is their Forex Bureau to be able to see their rate. All right. So let's just say from South Africa, I go to Otambo. Otambo is the airport I used to fly most of the time. I go to Otambo International Airport and I go to their Forex Bureau. And just looking at the Forex Bureau, I see USD ZAR. I see USD ZAR. So this is the exchange. Remember, I'm talking about two economies now. You have the United States and the South African rand. So I see USD ZAR and the exchange rate is what? Is 18.0. We even have USD ZAR. So I see USD ZAR on the board and the exchange rate is 18.0. So the exchange rate, what is the exchange rate again? 18.0. It means for me to be able to buy $1, I need 18.0 of the South African rand. So it means the dollar is more stronger than what? Than the South African rand. And if in the other way around, if I have a Great Britain pound USD to be 1.2 something, it means for me to be able to buy one Great Britain pound, I need 1.28 of the dollar. It means Great Britain pound is powerful than the dollar. All right? Because if I have to put it in terms of the euro, is powerful than Great Britain pound, and Great Britain pound is powerful than the dollar. So at the airport, I check on the Forex Bureau on the chart and I see 18.0. Now I need to change my money. So I take that $180,000 and I need to convert it now using the exchange rate now to the dollar. So if I divide $180,000 by 18, I have now $10,000. I have dollars now in my hand. So those dollars, everything is fine. We're about to travel. Then after about 30 minutes, we receive a call like boom. Because of COVID, everything is on lockdown. There are no flights again leaving from from South Africa to US. It's all everything. No one is going to fly again. And I'm like, damn it. So it means my money that I've already converted to the United States dollar, I need to change it back again to the South African rand, because there's no way in South Africa I'm going to use the dollar. I need to use my South African rand in South Africa. So at that same point where I'm getting that news, maybe just about 30 minutes, or maybe after 2 hours or 4 hours that I'm getting that news, what has happened? The exchange rate has moved from 18 to 20, from 18.0 to 20.0. See, this is Forex we're talking about, right? The exchange rate, by the time someone is, by the time I see that notice, like, sorry, all flights are grounded, no one is flying out of South Africa, I immediately go to the Forex Bureau again. Unfortunately, the exchange rate has moved from 18.0 to 20.0, and I have $10,000. So for me to be able to now convert that $10,000 back to the South African rand, I need to multiply it by the exchange rate. And if I multiply $10,000 by the exchange rate, which is 20.0, how much am I going to have? I'm going to have $200,000. I'm going to have 200,000 rand. Sorry, I'm going to have 200,000 rand. How much did I go to the airport with again? Can you see? This is Forex. I went to the airport with 180,000 rand. And just within 30 minutes, as the exchange rate is changing, it happens that I wasn't going to fly again, and I've changed my money to the dollar. I need to convert it again. Just within that 30 minutes of exchange rate, and just within that 30 minutes, my money has already moved from 180,000 rand to 200,000 rand. Can you guys see? So I went to the airport with $180,000, 180,000 rand, and after converting, as soon as my flight was grounded, I converted my $10,000 back to my rand. I'm now having 200,000 rand. So what is my profit? Remember, I went to the airport with 180,000 rand. Now I'm having 200,000 rand. If I subtract this from this, I just made a profit of 20,000 rand. That is Forex. That's Forex. That is Forex trading. Nothing more. Every other thing we're going to be doing from now to the end of the video and for the next 100 years of your life that you're going to be trading Forex is just going to be circled around this. How can you be able to make profit at the end of the day? How can you be able to, remember this is a physical example, but in most cases, this is done electronically. That's why you'll be able to need a broker. You'll be able to see these prices electronically. And with a strategy will be able to help you. Strategy plus fundamentals will be able to help you to easily know when a particular currency might be going up. Because remember, what allowed us to make that profit was when the exchange rate moves from 18 to 20. And when it moves from 18 to 20, that difference was called the pips. The difference is measured in terms of pips. So from 18 to 20, you can see that was a difference of 2 pips. That was a difference of 2 pips, and we made almost about $20,000. All right? So this is measured in terms, any change, any increment. A pip just stands for percentage in point, and it represents every small increment a particular asset can move. So we have pips both in stocks, and we also have pips in Forex. So it stands for percentage in point, and it measures every small increment in the market. So you can see the exchange rate moves from 18 to 20. The difference was 2 pips. So that was a difference of 2 pips. And just by that difference of 2 pips, we made a profit of $20,000. So throughout this entire session, trying to take you from zero to hero, grass to grace, when it comes to Forex trading, we're going to be circling now around how can you be able to have tools and strategies that will enable you to always make a prediction that will allow you to end up with a profit like this at the end of the day. Because there used to be something I used to do most of the times. Let's just say I have a particular level where I see, like, this is still another simple strategy where you can use to make money in Forex, even without trading. Like, it used to be most of the time I'll see when the dollar is very, very weak, and I can predict that, okay, this dollar has gotten to a level where it's going to start appreciating. What I will do is I can just take about 500,000 rand. I just put in dollars. 500,000 rand in terms of dollars should be almost about, let's just say almost about 25 or 30,000 rand. I'll just put that money in my brokerage account, right? I just deposit that money into my brokerage account, and I wait for maybe 2 to 3 or 4 months. After 2 to 3 to 4 months, the dollar is going to go up. As soon as the dollar goes up now, I just go back to my brokerage account and I withdraw my money. Simple. Without trading. That's making money in Forex trading without even trading. But that's more of passive. That's for somebody who have the patience, because I was able to predict based on fundamentals, particularly when COVID came out. I made a lot of money that way. All right, I just put that money there. I wait for it to grow. It's more like the buy and hold when it comes to Forex trading. As soon as the exchange rate increase, I just go back to my broker without even trading. I withdraw all that money again. All right, so let's just say I deposited when the exchange rate was what? When the exchange rate was 18. and the exchange rate moved from 18 to maybe 25. I go and withdraw that 500,000 rand again. If I withdraw that 500,000 rand, remember that 500,000 rand at that particular point in time, the money in my brokerage account, it would have moved from about $30,000 to about $40,000 at that particular point in time. All right, that is just the power of you knowing what is happening. Knowing it shouldn't be abstract. I want you to be able to feel it. I want you to be able to understand what is happening. You'll be able to make money in forex trading if you don't see forex trading again as a scam. If you don't see forex trading again as something which is abstract. If you understand very well to your fingertip what is moving the market, how the market moves, and the circles in the market. All right, so I hope that one is very, very clear, and I've been able to explain very clearly a typical example of a forex transaction. So going ahead, we'll be able to, when you start trading, you just need an electronic platform where you can place your trade. You don't need to be going to the airport like me to go and exchange your money to make profit. No, you'll be able to make your profit sitting in your house using your phone or your laptop, because a broker will be able to bring those prices to you. A broker will be able to bring those quotes to you, and using your strategy, you'll be able to predict if the market is going to go up or down. And if your prediction is correct, you make the money right where you are sitting. All right, so this was a physical example of a forex transaction, and let's move now to what is a demo, live, and a pro forma account. So things are getting heated up, guys. Things are getting tense as we're moving to this particular stage of our 60-minute course, which is going to take you from zero to hero when it comes to trading. Let's talk about a demo account, a live account, and a pro forma account. Remember, by now, you must have already known what is Forex, what is traded in the Forex market, what are currency pairs, what currency pairs should you trade, what is a broker, a typical example of a Forex transaction. Now, I'm somebody that I like being practical than theory. I like everything I do to be more like 80% practical and just about 20% theory. So you need to start practicing, all right? And for you to start practicing how to trade, you need what they call a demo account, all right? So that's why here you have a demo account. So what's a demo account? A demo account just stands for a demonstration account. As easy as that. So what is a demo account or a demonstration account? A demonstration account will allow you to be able to test the market using fake money before investing your hard-earned money. As easy as that. Remember, I put things simple. A demo account will allow you to be able to test what is Forex trading and how the market works using paper money or visual money without risking your real money. All right, so it's the same like you going to a pilot school, and once you get to a pilot school, remember, you spend about 3 to 4 months strictly on simulation. They will put you on flight simulation. You need to learn how to ride a plane, how to land a plane, how to take it off, how to go if there's a turbulence, how do you bring down the flaps, how do you do the anchor system, blah blah blah. You learn all of that on a simulation. You need to test upon test on a flight simulation before you can actually take the real plane, before you can actually even enter into a real plane and try to kick it off. All right, so that is their own demo piloting. I can call it demo piloting. All right, that's their own demo piloting. When it comes to Forex trading, we have a similar thing which is called a demo account. A demo account, every broker, remember what is a broker again? A broker is just a company or a third party that will be able to bring you those particular prices right to your phone or right to your computer. You just need to go to that particular broker and you sign up an account. Talking about brokers, don't worry, just check the link on the video description and you'll be able to see my recommended brokers where you can sign up a free account. Once you sign up a free account with your broker, the first thing I'll advise you to do is to create a demo account. All right, just create a demo account. It's for free. I've even seen people get scammed by buying demo account somewhere. It's for free. Just use the links on the video description, sign up with that particular broker and create a demonstration account. When you create that demonstration account, you'll be able to download your MT5, you'll be able to download your trading platform. And once you have your trading platform, I'm going to be showing you a strategy you can use to practice how to trade. So you will do all of that on your demonstration account. Don't deposit any money as of this stage. Please don't deposit any money. First of all, practice on your demo account before you can deposit money. All right, so that is a demo account. After you've practiced your demo account, and you see that you have a strategy which is already working, now you move to what? You move to now a live account. This is live, just from what it says, it's a live account, meaning this is a real money. This is hard-earned money. So this is just a small amount. I'll always advise you, when you get to this particular level, you deposit a small amount you can afford to lose. You deposit a small amount. If you have to let that amount go, you wouldn't jump up from a story building, you wouldn't cause suicide, or you wouldn't have suicidal thought. It should be a very small amount. You've already told yourself that I'm still learning these skills. I'm going to be able to have losers. I'm going to blow accounts. But in Forex trading, there is never a loser or there is never a losing trade. It is either you learn or you earn. As simple as that. In Forex trading, it is either you learn or you earn. If you place a trade or you blow an account, then the lessons you're going to use or the lessons you're going to get from that account or that trade you just lost are the same lesson you use tomorrow to make $10,000. The same lessons I learned from blowing my $10 account or my $20 account in 2015, which was my life savings, and I almost thought of causing suicide, are the same lessons I'm using today to make $20,000 or $40,000 in one trade or $40,000 in one day. So in Forex trading, you never lose. It is either you learn or you earn. That's what I'm saying. If you place a trade that doesn't go your way, you're going to be able to learn. And if that trade goes your way, you're going to be able to earn. So deposit a small amount which you can afford to lose. A small amount which your livelihood is not dependent on that amount. A small amount which you can, even if tomorrow someone says that account is not there, it's not going to have any emotional effect on your psychology. It's not going to have any emotional effect on your well-being as an individual. And another tip I can also give you here is, when it comes to a live account, be able to know that emotions are going to play in. Because that's why you can ask yourself, like, why do some people make money on a demo account, but when it comes to a live account, they make zero? They don't make any money. Why? Because when it comes to a demo account, you don't have any money on the line. You don't have anything on the line. That's why they used to say, when people pay, they pay attention. When people pay, they take it serious. All right? When it comes to demo account, that thing is visual money. People trade. When it comes to demo account, I see people trade with 10 million. People trade with 10 million in their demo account. Then when it comes to their live account, you see them, they have $100. That's a wonderful psychological shift, which even I myself, I can't handle. I can't handle that psychological shift. That's why when it comes to a demo account, the same amount you have in your demo account should represent the same amount you can have in your live account once you want to deposit live. So if you can afford to only deposit $1,000 in your live account, I want your demo account to be $1,000. If you can afford to deposit $5,000 in your live account, then I want your demo account to be $5,000. If you can afford to deposit just $200 or $100, I want your demo account to be the same. So that when you shift from demo to live, the psychological shift is not going to affect you a lot. You're just going to be using the same risk management, the same money management, the same lot size to be able to trade, because that was what you were practicing on your demo account. And now when you move to a live account, that's when now you start practicing to see if the same strategies are going to work now when you have real money on the line. That's what I'm saying. You can make money on your demo account, but when it comes to a live account, you wouldn't make money because emotions are involved. Anytime you place a trade now, you're already telling, oh, this is real money. This one is not demo. This one is not demo. If I lost this money, this is money from my 9-to-5 job that I've been working for 9 months, for over a whole month. So emotions come into play, and anytime you are trading emotionally, it tends to affect your decision-making ability. All right. Anytime you trade emotionally, it tends to affect your decision-making ability. That is very, very important. That's why I'm saying, when you go live, it should be an amount you can afford to lose, so that you don't trade emotionally. Perfect. So after you've practiced on your live account until your strategy is working for maybe 2 to 3 months, what I want you to do now is now to get a prop firm account. Remember, I'm talking about the transition. All right. I remember on this other slide, let's see what is a trading strategy. Good. So let's talk about, we're talking about the transition. Let me explain what is a prop firm, and then we'll come to the transition. So with a prop firm, remember, when you move from demo, this is the transition you can take. On your demo account, you should be able to practice for 1 to 2 months, strictly on your demo. Please don't hurry the process. You are still going to be trading 10 years to come. 40 years to come, 60 years to come. Don't hurry. Always think in terms of long term, right? So in your demo account, you can practice 1 to 2 months. Then on your live account, you can be able to practice again for 1 to 2 months to see if that same strategy is working on a live account. Then when you already see that that strategy is working on a live account, one challenge or one limitation which everyone in trading will face, including myself when I just started, is you won't have big capital. All right, you won't have big capital. You will only be able to make a reasonable amount of money in forex trading if you have a big capital. That's why a proprietary company or a prop firm is just a short form for proprietary trading or a proprietary company. All right, that's when a proprietary company is going to come in place to give you those funds to trade. So a prop firm will come and say, oh look, Mr. John, I can see that you already know how to trade. This is $100,000. Take this $100,000, show me those keys on this $100,000, and if you can make profit, you're going to keep 80%, while I only keep 20%. I'm going to pay you for your skis, you take 80%, while I keep 20%. That's a prop firm, you understand? So a prop firm will come in to be able to bridge that gap. We have hundreds of prop firms in the industry. But if you want to know my recommended prop firm to use, just check the link below to be able to use my recommended prop firm, the same prop firm I'm using. So what that prop firm is going to do, that prop firm is going to give you now big capital. Because when you are depositing on your live account, any small amount you deposit here, bro, don't plan to become a millionaire from this small account. Don't plan to buy a car to buy a car after 2 months from this small account. Don't plan to pay your mom's hospital bills or buy a house or move move abroad or what. Don't plan anything serious with this account. You are still learning at this stage. It's only when now you see that strategy is working here consistently on a live account that you can get a prop firm account. With a prop firm account, now you have $100,000. Now you have $200,000 or $400,000. With the prop firm below that I'm going to recommend below, they can give you money up to $600,000. With $600,000, trust me, if you could make 1% on your $100 account, 1% of $100 is $1. But 1% on $200,000 is $4,000. What can $4,000 do to you? And there are some months with the strategy I'm going to be teaching you, or with these tips, there are some months you are going to net the money with plus 10% or plus 20%. Plus 10% on $400,000 is what? That's $40,000. What can you do with 40? How can $40,000 change your life? A lot. So that's a prop firm, and I've had my own fair share of the importance of prop trading when it comes to forex trading. Because when I started in forex trading, bro, I blew a lot of money. I lost my life savings, everything, even including my house rent. I blew it in the forex market before I discovered that, okay, at this particular point in time, I needed help. And I got out. By that time, I enrolled in a forex institution in the UK called Apari Fund, and they taught me from A to Z. So what that institution do is, they will be able to teach you with the idea that, okay, if you come out and you are an exceptional student, they will give you their money to trade. I graduated after about 18 months of them teaching me how to trade. I came out and I could prove to them that, bro, I know how to trade this thing. Give me that money, let me trade. So they funded me with $200,000. That was back in 2017, 2018, before all these kids started coming into the game with pro firms here and there. Blah, blah. That was back in 2018. And back then, when you make profit from your account, you only keep 50% and the prop firm keeps 50%. It's not like today where if you make profit from your prop firm account, you can keep even 90% and the prop firm only keeps 10%. So they funded me with $200,000, and that was where I made my first $50,000 profit. Withdraw. My share was almost about $30-something thousand, and I opened my two live accounts, and the rest is history. I opened my 2 live accounts, and I started growing those live accounts, withdrawing from my live account. Because remember, at this stage, once you've made money, this is the circle. Your goal is to be able to start from here, all right? To learn from here. You have a strategy, you practice from here until you see that strategy is working. Then you deposit small money. You deposit now small money in your live account to test to see if that strategy is still going to work in a live market condition. Once it's working in a live market condition, what you need now is bigger capital. That's when you buy a prop firm account. When you make money now from prop firms, bro, the circle now goes back like this. This is a circle. That circle now goes back to private account. Your main idea trading with a prop firm account should be to raise capital for your private account. That should be the main idea, to raise capital for your private account. As soon as you are raising capital, you are putting out in your private brokerage account. Because in your private account, there are no rules. No one is restricting your trading. No one is limiting you from trading. You can trade the way you want. You can risk the way you want, because prop firms have a lot of rules. So the main reason you are trading with a prop firm should be to raise capital for your private account. And as soon as you make money here, always keep a percentage of that money to buy more challenges, to reinvest in buying more challenges. That's why my goal before the start of this year was to have $2 million in funding. And I think after 2 or 3 months after that, I was already on more than $2.5 million in funding. That's just important of setting goals. And how did I do that? I made profit. I started with $200,000, made profit from $200,000, keep 50% of the profit, and 50% I reinvested in buying more challenges. And before I saw it, I was already on almost about 300. I was almost on about $3 million in funding in Forex. $3 million, you just need to make just about 5% a month, and you'll be fine. Just about 5% a month. That's when you start knowing that, okay, even if I'm risking just 0.5% of my account in one trade, I can still be a multi-millionaire at the end of the day. That's why you guys don't see me making $40,000 in one day, $30,000 in one day. It's not magic. That is not magic. This is the same thing I'm showing you on this particular video. If you follow this circle, trust me, you're going to arrive at that same level. It's not a scam. Follow this circle I'm showing you. All right. So that is that when it comes to a demo account, a demo account, a private account, and then a prop firm account, and how you can navigate. Remember, I said this one, practice for at least 2 months. When you deposit small money, practice for at least 2 months. And this one is infinity. You can trade prop firms so long as they are still existing. You can trade prop firms, but the goal should be to be raising money here for your private account. By now, even if my private account is on $200,000 or $400,000, that is my money, bro. No one is going to take that one away from me. No one is going to control the way I trade with that particular account. So that is that about the 3 different types of demo trading, live trading, and prop firm trading. I don't know if you guys are feeling this heat already. I don't know if you guys are feeling the wave of being a profitable Forex trader, or the freedom, the financial freedom, or a taste of what we feel every day as millionaires or as Forex millionaires. And one thing that will help you to be able to get to the level where we are, or to be able to taste this financial freedom, is going to be your strategy. It's going to be your trading strategy. That's why on this slide, we're going to be talking about what is a trading strategy, types of strategies, tips on getting a profitable bulletproof strategy. Very, very important. Everything we've been saying on this video will be totally useless and will have no use if at the end of the video I don't give you tips on forming your dope strategy, or I don't give you a strategy which you can already start using today. The difference between real world and Forex trading is that in real world, they actually key people, while in Forex trading, you need to learn how to key the market. And what will guide you on being able to key the market is a strategy. The same thing in war. If a soldier is going for war, what will allow that soldier to win in the market is his war strategy. So just as they need a strategy in war to win, in Forex trading, we need a trading strategy. So that will take us now to what is a trading strategy. So a trading strategy is just a step-by-step approach or a step-by-step guide that helps you to be able to make an informed, remember keyword here is an informed decision about any asset you are trading. All right. So it's just a step-by-step approach that helps you to be able to make an informed decision. Remember, when it comes to trading, you always talk about trading in terms of probabilities. All right, in terms of probabilities. So a strategy will help you to be able to have ideas on whether the trade will have more probability on going your way or not. And when the strategy tells you that, okay, this trade has a 90% probability on being a profitable one or going in your favor, that's where you will be able to place the buy button. So that is a trading strategy. And a trading strategy, what will help you to be able to come up with the dope or the best profitable trading strategy will be your trading plan. So what is a trading plan? A trading plan is just a checklist that has all the points that must be met before you take a trade. So your trading plan is something you never go out of your trading plan. That's why they used to say you plan your trade and you trade your plan. So a trading plan will just be something like this, where you have a box, maybe first box is I must be able to trade during this particular market session. Maybe the second box is going to be I only trade this particular asset, or I only raise this particular amount. This is my risk tolerance. So you can see those are different tick boxes that you can have on your trading plan. So that's your trading plan, and your trading plan will help you to come out with the best trading strategy ever. Then let's go to now types of strategies. Under types of strategies, now we have three types of strategies. We have day trading. So we have day trading strategies. Let's start with the first one, which is scalping. We have scalping strategies. We have day trading. Strategies, and then we have swing trading strategies. All right. So swing trading strategies. So I'm going to explain the differences. Someone who is a scalper or someone who is having a scalping strategy is someone who gets into the trade and out within a minute or within seconds. That's a scalper. So a scalper is someone who can bear the risk, someone who has the adrenaline, someone who can handle the adrenaline in the market, someone who can be able to handle the rush, who can be able to handle the noise, because you are trading with a 1 minute time frame or the daily time frame. That will bring us to time frame, which a time frame is just a circle where a particular price will be predicted. So if I'm using a 5 minute time frame, it means I'll only be able to predict the price after that particular 5 minutes. So that's a scalper. Then we'll go to day traders. A day trader is someone whom his trade is open and closed within a day. So that's a day trader. And then we'll go to a swing trader. A swing trader is someone whom his trade is open and closed from days to weeks to even months. So all these types of traders have different strategies. And if you are just starting, I'll advise you to be able to practice more of day trading and swing trading strategy. Don't just go to scalping at the start, because scalping is for pro traders. Scalping is for advanced traders. That's why when you move to scalping, you start going into something we call robotic trading, where you see now algorithmic trading or high frequency trading. Most of the people who are good with scalping are people who can trade with robots. Like I have one of the most profitable Forex robot called Patrex Pro. So I was able to develop Patrex Pro because I'm a pro when it comes to scalping. I'm a pro when it comes to all these type of traders. It just depends on the time availability I have. If I'm traveling and I'm moving from country to country and I see that I don't have time, then I'll prefer to be a swing trader so that I don't need to be watching at my computer. I don't need to be watching at every trade. I just let the market do its thing while I'm traveling. So after talking about the different types of traders, let's talk about different types of strategies. Let's talk about tips on getting a profitable Forex strategy. The first tip will be, I don't want you to be what we call an SP, a strategy prostitute. All right. So what is a strategy prostitute? A strategy prostitute is someone who takes a strategy today, backtests it for maybe 2 to 3 days, and as soon as he or she has a loss, he abandons that strategy, picks strategy number 2, tests it for maybe 2 to 3 weeks. As soon as he has a couple of losses, he abandons it again. So he keeps jumping from strategy number 1 to strategy number 2, from strategy to strategy. Those are the kind of people we call strategy prostitute. And there is no way you can be able to have a dope strategy which is profitable if you keep jumping from strategy to strategy. When it comes to Forex trading, data is king. Data is king. And you only be able to get a reasonable amount of data that you can use to assess the profitability of your strategy if you give yourself time to backtest that strategy for some time. Don't just take a strategy from maybe Mr. John, from this Guru John, you backtest it for a day or two, you see that maybe that you have a loss, you drop it, you go to Guru number 2, bro. Take one strategy and stick to that strategy. Backtest that strategy for a couple of months until you can see results on on that strategy, or if that strategy is going to be profitable or not after a couple of months. It's only after a couple of months that you can be able to have a reasonable amount of data to be able to ascertain if that strategy is going to be profitable or not. Next point on our list that will help you to be able to have a profitable, dope, bulletproof strategy is your trading plan. I already explained the importance of a trading plan when I was talking about this checklist. To just say a trading plan is just a checklist that will be able to give you step-by-step points that you need to follow anytime you want to follow or anytime you want to place a trade. So the next point on tips you need to follow to be able to get a profitable bulletproof strategy is what? Is having a trading plan. Remember when we were talking about a trading plan here, where I just mentioned a trading plan is just a step-by-step approach, or it's just a step-by-step guide that will be able to give you tips anytime you're trading. Or you need to be able to follow your trading plan religiously. That's what they used to say, plan your trade and trade your plan. If anytime you have a winner which is out of not following your trading plan, then that is considered as an unjustified winner. Which an unjustified winner is just as bad as a loser, because there is no way you're going to repeat those steps tomorrow. You are just gambling. At that point in time, we just consider you as a gambler, not a trader. The difference between gambling and forex trading is that in forex trading, we have a strategy. We have a strategy that will be able to give us an edge over the market. When it comes to gambling, there is no particular edge. That's why I hate binary options. If you're somebody who trades binary option has no edge. But when it comes to forex trading, if you have a dope strategy that is working, you'll be able to have a risk management parameter involved, which allow you to be able to have a reasonable risk to reward. With that reasonable risk to reward, it is going to give you what? An edge over the market. It is going to give you an edge over the market. So that's the difference between gambling and actually trading forex. So the next point on our list, which will help you to be able to have a dope and a solid profitable strategy, is by backtesting and demo trading. You won't know by reading books. You won't know by watching 200 videos. You actually have to do it. You actually have to get to the dirty work. You actually have to backtest. So backtest as much as you can and demo trade. So what is backtesting? Backtesting is when you just go to your MT5 or you go to your trading platform and you're actually just looking and asking yourself question like, okay, what if I would have buy at this point and put my stop loss at this point and my take profit at this point? Would I have made money? Would I have made profit? Would I have come out as a winner or as a loser? So those are questions you ask yourself. And then what is demo trading? Demo trading is then, okay, after backtesting, you actually place the trade, but now the trades are placed on a demo account. So that is demo trading. So by doing these two, backtesting and demo trading, that is going to help you to have a dope and a profitable solid strategy. After having a dope and a profitable solid strategy, this is an example of a simple profitable forex trading strategy, and this strategy is called the support and resistance. All right, support and resistance strategy. So this is the simplest strategy that has been working. I didn't invent the wheel. I'm not trying to reinvent the wheel. I'm just showing you guys the way which is working. So this strategy is simple. It's called the support and resistance strategy. And with this strategy, what you have to do is you need to be able to be a pro on determining your support and determining your resistance. So what is a support and what is a resistance? If I'm standing on this floor, right, this is going to help you to easily understand. I like taking examples. I like putting everything I do to real life examples so that I can easily understand. If I'm standing on this floor and I'm joking on this floor, right, there is something that is protecting me or that is supporting me. That thing that is supporting me is the floor. And where is that thing? Is below. So your support is always below. So if I can just look here, this will be my support. All right? This will be my support. My support zone. I like calling it a zone, not just a line. So this will be my support. I think let's change the color and put the red. So this will be my support. Let me just draw the line again. So this will be my support. Remember, you need to first of all determine your support and your resistance. Good. That is my support, and that is now. Let's go to now my resistance. If I'm standing here, there's something supporting me. So my support line is always, or my support zone is always below. If something happens and gravity doesn't hold again, and I have to fly out of this room, there's a resistance. The ceiling is gonna act as my resistance. So the resistance is always where? The resistance is always above. So that's where if you can come here, I can see the market had a 10 here, then had a 10 somewhere here, had a 10. So my resistance is gonna be somewhere here. This will be my resistance zone, this area. Can you see? So this will be my resistance. My resistance zone, right? So now we have our support and we have our zones. Remember, these are simple steps. You need to be able to determine your support and your resistance. And how do you determine your support again? You need to know the support is always below and the resistance is always above. And you draw your support zone by linking the most recent swings in the market or where the market had turns. I can be able to see that. Let's change this color and use. I can be able to see that this market had a turn somewhere here. Can you see? This market had a turn somewhere here, and this market